The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, squeeze-a-blee, soft host. Once more, do we go into the breach, dear friends?
The following takes place between 2 p.m. and 3 p.m.
No. Bueller? Oh, there they are. Slow on the uptake today. What else do we have going on out here as we open up the show? We're off about 5 or 6 points on the S&P cash. Volume is just a tad lighter than yesterday, but still light. A little over 2 billion, we're getting close to 2.1 billion shares on the New York Stock Exchange tape. This is what they call Weird Wally Wednesday. This is the Wednesday before expiration that market makers, mostly because of risk profiles, decide to start selling guns to both sides of the war. What they want to do is, it's just like the bookies. They always want to put off half the risk on one side, half the risk on the other, and then the spread pretty much wipes out the rest of the folks. If they do it long enough, they'll be successful. That's kind of the same thing, but for the most part, what they want to do is make sure they don't get in any surprises. This is where the risk-reward gets rather poor for them, but gets much better for us. And, of course, the thing to do is have an infinite amount of patience while we're waiting for maybe the lowest prices of the month for options. And sometimes you can find a compelling story and have a very low risk to reward scenario. But this is the first day that we get a good read on what option market makers think is going to happen on the 19th. So we'll keep an eye on that. At the moment, they are pretty much all wearing a frown. Now, can they turn that frown upside down? I don't think so. The market's not off a whole lot here, but my guess is this is the kind of action that we may be looking at the rest of the month. We've been waiting for this kind of paper cut market to head south. I'd been looking for a move back down to 2120 on the S&P cash, and I suspect that is where we're headed. Could it get worse from there? Yes. Do I have any evidence of that? The answer is yes. I put it in my newsletter over the last couple of days. But one of the worst things that I think many traders do is they have no sense of proportion. And that is that to them, they don't really look at a move. Let's say a move in the Dow Jones is 100 points, and then the next day they get a 500-point move. The 100-point move to the 500-point move, the 500-point move isn't 5 times the signal that the 100-point move is at these levels. It's actually 9.6 or 9.5. I'd have to go back and work it out. It's something like that, 9.5, 9.6 times the signal that the 100-point move is. So when I see stocks that are down 30% today, we'll go through them. Those are some rather large signals in telling you that the market did not have the price is right on those. And, of course, 30% off, certainly we're going to hear some of this today. Of course, thank God I didn't have any of those. As of Friday, I thought that the risk reward was horrible, long and short. Monday, I warmed up to it a great deal and started thinking about putting on positions. And I think we put one on Monday, a couple more tomorrow, even a long-term letter. I'm thinking that there is positions to be had to the downside. You, of course, can go to the front page of TFNN.com and pick out either one of those newsletters, either the longer investment term newsletter and or the shorter term daily trading newsletter. I don't trade 5 or 10 or 15-minute charts. We have others that do that job here. Mine are swing trades, and I look for doubles, triples, and home runs. Like many people, I don't want to get out of bed for $25. So being a little bit greedy, waiting for the big fat patch or fastball down the center is one of my tenets. If not, I need to go work on my tan a little bit more at the pool and wait for those big opportunities. You always get maybe 3 or 4 a year where there's just that big fat fastball that's hanging out right in the middle of the plate. And you get the nice wood on the bat, and you know it before it even goes over the fence. I can't say that, but I do have the biggest signal that I've had in the markets in the last 5 years. And again, it's one of those signals that wasn't just a little signal, just it wasn't a little bit much, wasn't a little bit more people just getting a little bit pregnant. It was a very pregnant kind of signal out there, binary, yes or no. And the thing told me that not only were the big men of the street out there telling people to get short, they were actually getting short. And like I said, 2120 probably the first area that I'm looking to get tested. I can't say that we're going to get that tested before options expiration for the monthlies, but I suspect that by the first week, even if we have these kind of lighter trading moves, that we are moving back to that 2120 level. And we'll see how things go out here. But volume has been pathetic. It has been light. It has been variable. And as far as I can tell, most of the patterns and most of the stocks out there set up distribution patterns, and even stocks like Disney today that open lower and then they run it higher. My guess is that they're running it higher only to sell again. They will continue to do that until people won't buy it any longer. And hopefully on their side, they've already gotten out of as much stock as they can before the music stops and somebody's sitting without a chair. In the meantime, time to get this party started as we are almost at the lows of the day on the S&P cash.
That it's all just a little bit of history repeating.
On this day in 1897, looking for a remedy for his father's rheumatism, a young German chemist named Felix Hoffmann synthesizes a stable form of acetylacid. Boy, I can't even say it. Acetylacid. Acid. You know, one of the things of being a trader for 18 years is you don't have to pronounce a lot of words. Anyway, we're going to call it aspirin. Anyway, the head of Bayer's Pharmaceutical Institute lambasts Hoffmann's discovery as typical Berlin hot air, but soon becomes the biggest and best-selling drug of all time, actually made from the bark of a tree originally. We'll be back after this short timeout.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Are we ready? Hopefully we are. Come on.
Acetylsalicylic.
Oh, that's no good.
Acetylsalicylic.
Well, I said, I don't think that's right either. The internet sometimes is not always right. Of course, I believe everything I listen to and see on the internet. Of course, we're down here at the lows of the day, 2174 on the S&P cash. What else is going on out here? Some of the stuff is starting to filter out of the big hacker conferences that started last Friday. I believe everything I read on the internet. Anyway, some of the new stuff for hacking is coming out of the hacking conferences. For those people that are not familiar with these, in Las Vegas, every kind of the end of the summer, there are a couple of hacker conferences. They go on pretty much at the same time, back to back. One is a security kind of investigator, and the other one are the out-and-out black hat hackers. These are the people that would do ill will to folks. But they got it up on the web now, and there's kind of a couple things I've talked about in self-driving cars. And that is just how easy it would be to defeat them and hack them. But these researchers jammed the sensors of the rear sensors of the Model S, so the car did not know about it. It was about ready to hit a person behind it. And another one, they spoofed its autopilot to trick it into thinking it would drive into something that wasn't actually there and made it stop in the street. They also used off-the-shelf pencil lasers to defeat the onboard cameras, and they wrapped objects up in cheap black foam that rendered them invisible to the car's sensor. It backed right into them. We've talked about, these are some things that happen in broad daylight, much less black ice on bridges. What else can we think of? Driving rain that you can't see through. What else? Snow, fog. If you are a computer engineer There is something called the edge case. And one of the reasons I've warned about Tesla and can't really be short it because it's about 100%, 150% short for you statisticians out there. Way too short for me to actually pull the trigger on it. And eventually, the shorts will get out of it, and there'll be a good opportunity after everybody's bored. But there's these things called edge cases, and they pop up all the time. They happen in the airliners and airlines, and even in Boeing and Airbus. But these things maybe take 2 or 3 or 4 different things happening in a row, all of them by themselves seemingly not a big deal, and you start finding out. Now, what happens when you have a bunch of people with a lot of time living in their basements with nothing better to do than find out ways to maybe set a little sound creating device on the corner and wreck every Tesla? And like I said, they haven't even started to get into the rest of it. I know just how tough some of these things are. And we're not talking about planes that are got spacing at 40,000 feet that are 5 miles away from each other or 10 miles. We're talking about cars that are 10 to 15 feet behind each other and maybe doing 45, 55, 70 miles an hour. Man, I would not want to be the guy in charge of all of this. I know that there was another accident in Tesla this morning, but the amount of ways that I've thought of defeating the systems in the cars out there are massive. Not only doing that, but how about, just ultrasonic sound making devices, which is what they used here, seem to be the easiest one to overpower the sensors in the car. And, you've got a big problem already with cell phone jammers and GPS jammers on major highways in this country. People are tired of people wandering off the road. So they've bought their cell phone jammers. They've bought their GPS jammers. You can buy these things for less than $200 for people that are constantly watching their employees. The employees just buy these things, put them in their pocket, turn them on, and jam the GPS device. Can you imagine somebody jamming a GPS device at the corner? Pretty easy to figure out. As I said, don't get all sucked into the sell the sizzle, because this one is one that you will have to buy the steak on. And if that steak kills the passengers of that car, there will be hell to pay. And of course, the fat, obese lawyer that's constantly on here in Tampa and all over all of Florida. What's his name? Don't know. But he's always everywhere down here. All of them are, the ambulance chasers in Florida. Can you imagine how these guys are already salivating about a company with a 40 or 50 or $100 billion market cap? Just how much money do you think that they can get out of those companies? Just a thought. Anyway, some other things going on. Listening to Disney last night. Currently, there's about 550 scripted TV shows going on right now. And interestingly enough, I think it was on Variety that I saw it, that by 2017, there will be some 700 different scripted TV shows on streaming, live, everything else. The question is just how many of these things have to go away. I know half of them have to be something I wouldn't give more than 1 minute of viewing. But the balkanization, that's B-A-L-K, not vulcanization like car tires, the balkanization of TV is going to be big. Apple is really running into this. There were some more articles about it today. But a lot of these places like ESPN look to me like there may be better offerings out there in the very short term, especially when you talk about a company like Disney that is maybe the most controlling of any companies that I've ever had any dealings with in my life. Many other people like Steve Rhodes actually worked at their place. But what I'm thinking is that maybe it's about time that for some consolidation. My guess is it's going to be tough for 700 some odd scripted TV shows to find a home, and it's probably going to get a lot narrower, my guess. Yeah, man, there's a handful of stock of shows everybody tends to watch. Probably the biggest one everybody loves watching, of course, is Game of Thrones. House of Cards, maybe a little less than that. There's a handful of them that are wonderful shows. But 10 tons of this stuff is just out there filling time. And it just makes me want to think what's going to go on in the near future. But maybe it's time for the great TV crash, i.e. where we get down to maybe 200 or 250 shows a month that you could watch. Anyway, we'll be back after this. 2173 on the S&P Cash.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
A few questions in the den. One was about an artificial intelligence company from that Intel is buying. Most of what they did is not very public. So I can't make a lot of comments on the company they made other than it was about $10 million an employee. It was a pretty small company, 59, 69 employees, something like that. But a great deal of what's going on in Intel has to do with the move, of course, to not artificial intelligence. I think that's a bad word and probably should be replaced with what the industry is actually calling machine learning, which is much more adapt. Artificial intelligence assumes that there's some intelligence, and machine learning is probably much more apropos. If you spend enough time, if you do enough, you can find probably some hidden jewels, but it's more about data mining than it is about artificial intelligence. At least that company is. $350 million or whatever it was. Yeah, I think it was $350 million. Unless you were a sweeper kind of dude or a janitor, it came out to about $10 million per active employee in the company. So actually a pretty good buyout for $350 million for someone. Intel, it's Intel, it's really, like I said, there wasn't a lot of stuff out of this company yet. Whatever Intel saw, they bought, and we're not going to have a great read on it. Of course, Intel really moving forward with its new memory initiative. They're opening up that today, even to AMD. So they are going to open up the specs. So the new memory that'll be coming out somewhere around the end of the year broadly, although it's already shipping to some folks at limited levels, will be available on AMD computers, chip computers, as well as Intel-based computers, and of course servers and the rest of the stuff. So look for that a little bit farther down the road. I thought that was kind of interesting today on Intel's part. Planetaire, which is the big company backed by the CIA, also bought out somebody, a company called Silk. And its team is going directly to work at Planetaire. They're just shuttering the old company. But this is a data visualization company. Planetaire is probably going to be one of the bigger IPOs when it does come out. They're trying to push this thing out in about a year. This will be very much a black box company, i.e., they are not going to be able to tell you a great deal about what they do, because a great deal of what they do is for the government, and they can't tell you. So I don't know how you value a company like that, but they are moving along and pushing and trying to get some of the rough edges off the company to get it out the door as a public company in the near future. And of course, who's the big guy in Silicon Valley now that was at the Republican convention? His name just escapes me at the moment. Is one of the bigger backers of that. Yeah, Peter Thiel, thanks. Brazil, if you didn't think that enough was going on down there with the Olympics, their Senate voted today to indict its ex-president on charges of breaking budget laws and putting her on trial for impeachment processes. I haven't seen this actually done anywhere, but they're doing it right now, I think, while everything else is being distracted. Look for problems and big problems in Brazil. This procedure takes about 2 months to go through. So somewhere around the 1st of October, look for a lot of stuff going on. Of course, she was a big communist carrying the AK-47 up in the hills, doing a lot of other stuff. The question is whether or not she will go peacefully. But at least at the moment, it looks like she will. But again, one of the more corrupt individuals in Brazil. Communists all start off wonderful. And then, of course, they all end up the same way, don't they? After the bell tonight, we've got Blue Buffalo, Shake Shack, and Taro Pharmaceuticals. Blue Buffalo could have been a failed IPO. It did a little bit better. Shake Shack, way overpriced in my opinion. And who knows, we're going to look at some pharma stocks today. But Taro after the bell. So not much that would actually move the market tonight. These are all fairly, Taro probably the biggest one of the bunch, Shake Shack the most overpriced, Blue Buffalo kind of coming off the lows as a failed IPO. Now, tomorrow morning, a lot more of what we're looking for out here. So it might be time to be up by 7 and see these earnings roll out. Alibaba Group, Brinker International, Kohl's, Macy's, Royal Gold, and YY, which is the stock from Russia. So those are going to kind of be the ones that I'm looking for in the morning to give us a read on which way we are going in this market. It is a mad market, and we will go forward, higher, and onward as we look at stocks today. You can always give me a call at 877-927-6648. What else can we say about it? Oh, email me at path@tfnn.com. And, of course, if you love the show, then you got to tell people about it. You got to spread the good word. If you just tell one person.
And he tells 2 friends, and she tells 2 friends, and so on, and so on, and so on.
It would be nice, wouldn't it? Hopefully. What else is going on out there? Oh, we're going to look at some stocks fairly quickly. Of course, the biggest losers out here today seem to all be around pharma and Myriad Genetics, MYGN, gets the loser horn out here today. It's off 33%, and it is problematic. I don't know what else you can say about this thing other than we may need to take the chart back even farther to see what's back, way back. We got to go into the way back machine here. See if I can go back even farther. Is there anything out here? We'll go back 4 years. Tough to say. Come on. There we go. Finally got some data. Oh, we're blowing. Well, this is very interesting. I'm glad I spent the time. December 30th, 2013, $20.02, 10 million shares. We went through that this morning already with 14 million shares. Kind of tells you everything that we needed to know. The IBB and a lot of the stocks in it, we got to about that 290, 295. It looked fairly weak. And, of course, they dragged out a bunch of rumors on IBB. And kind of pushed this thing up, held it up. I suspect the IBB up in this upper range for a while. We'll look at that when we come back. Got a lot of other stocks that are out here moving and more opinion. But be a friend. Tell somebody about the Power Trading Hour. I need your help.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And everybody knows how I feel about solar companies. We had a discussion in the den this morning with John from Philadelphia. To right now make solar panels pretty much equitable with the price of energy, you'd have to see natural gas go to about $9. What is it? Upper twos now. So, you'd have to see the thing double, triple. You have to see the thing triple, natural gas triple. Now, the prices are probably going to come down. People figuring out how to manufacture things a little bit better. They are, but it still is one of these things where there's no good storage option. Everybody is still talking about batteries. Batteries are chemistry. Chemistry will go south. There is not a lot of talk about solid-state batteries out here that actually don't consume anything like expensive aluminum or anything else. That means that you still have to have that power plant still going out there. And that's like buying 2 cars because you want one to run on solar. You've still got to have that other one to run on gas for when the sun isn't shining. It's just kind of a ridiculous idea. And I love the idea of the government spending money to make solar a possibility. They just should have spent it on R&D, not on trying to make a market where there was none. So that's kind of it. Just another big move down for sun power. And I don't think that there's anything else you can say other than that. We're looking back here now, 3 years, and there's still nothing. I don't know how many years I'd have to go back. My guess is 2009. Economically, these things do not make sense. And, there's some things that do make sense, and that is electronics. We've seen Moore's Law go since 1967, almost continually up to this time. Every time everybody says that we can't bust it, we do. But chemistry is not electronics. Chemistry is chemistry. It moves forward at about 2-3% better each year. It doesn't get 100% or 200% or 500% faster in the next 18 months. The price does not drop in half and half of that in the next 18 months. The constant and never-ending evolution of electronics is not applicable to either solar cells and or batteries, both of which would have to be some kind of a solution out there to actually bypass all this stuff. Mr. Musk out talking a lot of stuff out of his rear end today again too. It didn't see like it really moved the stock much. It's down a little bit. Again, the stock is just way too short. The problem is that you would have to sit through a lot out here waiting for this thing to probably plop. My given price on this, or at least fair market value on Tesla, is about $40. What else did we have going on out here today? Biogen Systems off 26%. Tidewater, as I said a few days ago, this one was the best looking stock in the market, but I could not play it. One, I didn't like the long-term look for crude. And secondly, they had earnings coming up, so I couldn't play it. Had a nice bounce into earnings. And of course, the result is out here. But even now, not bad volume for this $3.79 low out here. You would need this thing to close back in that $3.79 low, and that would give you a false break to the bottom out here, implying that you would go back up to the $5.75, and not probably a bad trade. But we'll have to keep an eye on this one. As long as volume is light in the next couple of days, this thing closes back above 379, you know exactly where your risk reward is in this. I do not like crude. I think it is headed back lower. I think we still have the $38 range to test. I think all we had was a little bit of a hiccup out here. A lot of people maybe getting the cart in front of the horse for crude, and we will see. But I still think that $38 level needs to be tested. If you break that, then you could get down into the 33 area. Why I wouldn't, even if a stock looks great, I can't get it. Now, after earnings, a lot of people washed out in the last few days, or next coming few days. If energy would hit, crude would hit like $38, you get a low volume test in there. I would be much more interested in playing this. It still does not look bad, even though it's bad for everybody that went into this for earnings. What else do we have? Another one that not looking so hot out here is Perigo. This one is breaking some of its lows out here on high volume. Your last major low was May 13th at $84.84. 3.9 million shares. You're with 11 million shares. Again, this may be some kind of washout. You got to watch if this can close back above the $84.85 low from May 13th. But it's going to take some days of this one going sideways. There's nothing to buy out here. Of course, they're flogging this one on the street today, but it's not doing anything more than going back up and hitting its resistance level. That's Ralph Lauren. Came down on a huge volume. If you go back and look at the EPS numbers that they had back here when this thing fell apart on the 4th of February and look at them now, all they did was move the bar way down. Now suddenly it looks like they're doing pretty good. Are they doing any better than when this thing fell apart? And the numbers out there, no. It's like everything. All they did was move the expectations down and had a lot of people short this stock. They're going to run them here for a little while. But my guess is this is about as good as it gets. If you got to about 110 and volume is very light in the next few days, I suspect that may be a chance to get in there and get short yet again on Ralph Lauren. So maybe another bite out of that apple. What else do we have going on out here? CyberArk. I thought this one might have a chance of just going sideways. I didn't think this thing was going higher after earnings, but didn't see as much weakness out here. Their story is about the same as FireEye, and that is they're still having a problem getting anybody to buy their product, even though everybody needs it horribly. It is in a world where everybody is fighting to make sure they get that last penny on earnings. Many CEOs are still ignoring what happens when people bust into their systems. They have a great moat. They don't have any soldiers in there once the bad people get inside that moat. This looks like it's being FireEye's moving back down to test that February 11th low at $11.35. I would love it a lot more back at that 1135 with light volume, something like 6 or 5 million shares. These may find their lows in the next pullback, and that's where I think this one and maybe CyberEye might have some nice setups. Fossil was out. Of course, this thing has come from, pretty much heaven to hell based on the iWatch. But societal norms change. People don't wear watches much anymore. And I think that hasn't and won't change. We'll be back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
We continue to see stocks come in, and even with some volume, Fossil was up a little bit earlier today and sold off fairly good. It's hard for me to see this thing not in a trading range between about 26 bucks and this, let's call it 32, 33 range out here. I just don't see kids picking up watches anytime soon, and that means that they won't be thinking of them as they grow into older age, where maybe they'd want to have one for even flash reasons. Everybody's got a cell phone with them. It's got the time in it. And I don't know what else you can say. Eventually you're the last buggy maker. I've got a couple of very expensive watches. I wear them if I go out to someplace, but man, for the most part, just don't wear them anymore. And I don't know if you can say anything more about that. Question was to look at Disney out here. And to me, it just always reigns and continues to reign in about a big asymmetrical triangle pattern with Disney. This thing is still in it. What you would want to watch for is if this thing breaks out upwards, that's probably the head fake before this thing comes back down. If you missed the first part of the show, I do want to do a wrap-up. That is that I suspect that we're heading around 2120 on the S&P cash. That's not such a big deal. That's only, what, about 50 points lower than where we're at now. We're at 2172. Volume's not all that big, 2.4 billion shares. But pullbacks don't have to have volume if you're bullish long term, but you still have to wait through the pullbacks. The downside is I have seen one of the biggest signals that we've had in 5 years that suggests that the big men of Wall Street are not very optimistic. And this is not the kind of stupid thing like going short at the very bottom of the market that retail traders tend to do. This is, and by the size, has to be the big men of Wall Street. I would just say if you want to be long, the risk reward is poor. I can't tell you that there is some kind of incredible signal that most people would see in traditional technical analysis that says they would be short other than just looking for a natural retrace in the stock market. But when I see a signal that is huge and an anomaly in the market, especially from some of the work I do, I'm just saying if you want to be long, we've said it the last couple of days, the VIX is so low now that I don't know how I could be long without having a put underneath the stock that I would have. I think that would probably be the best advice out here if you have to be long. Friends don't let friends go long unless they have a put underneath it right now. We've looked at some of these big stocks out here where they've lost 30% and more of their value in a single day. These aren't fly-by-night stocks. Now, maybe they're in the more volatile part of the market, but it's not something that you tend to see in a very bullish market. It is the kind of action you see kind of at the very end before an avalanche, where just where that snow's on the peak of that mountain, just kind of curved over on the top, and that thing cracks, and it hits the snow below it, and everything else just kind of pushes back down. Now, maybe it's just a tiny avalanche out here, but I would be girding my loins against lower prices for the rest of this month. We'll see you tomorrow. Same bat channel, same bat time. Remember to sell when you can, not when you have to.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.